Anthropic's monster projections, profitable by 2028? Let's cut straight to the chase. Anthropic, the company behind Claude, the AI that's been eating into ChatGPT's market share faster than anyone expected, just dropped internal projections that have Wall Street, Silicon Valley, and every AI founder on Twitter speechless. The numbers are so aggressive they sound like delusion until you look at the revenue trajectory they're already on. By the end of 2025, Anthropic is forecasting $2.7 billion in annualized revenue. 2026, $11.3 billion. 2027, $29.4 billion. And 2028, $62 billion, with positive net income starting mid-2027 and reaching tens of billions in profit by the end of the decade BR. These aren't public guidance numbers. These are the slides shown to late-stage investors in their latest funding conversations. And yes, the deck says profitable by 2028 in bold on page 27. The question everyone is asking is simple. Is this insane, or is this the new normal? Let's break it down, step by step, exactly how Anthropic plans to go from $600 million ARR today, November 2025, to $62 billion in less than 3 years, and why a growing number of billion-dollar funds are quietly betting they'll actually pull it off. First, the revenue engine nobody saw coming. Most people still think Anthropic makes money the OpenAI way. Sell API access to Claude 3.5 Sonnet and Claude 3 Opus. That's cute. That's table stakes. That business alone is already doing $150 million a month and growing 25% month over month. But that's not where the monster growth comes from. The real rocket fuel is something they call Claude for Work, an enterprise suite that's quietly signing 7- and 8-figure deals with Fortune 500 companies faster than Salesforce did in its early days. Internal data shows they closed 83 deals over $1 million ACV in the last 90 days alone. Average deal size? $4.8 million. Average contract length? 38 months. That's $400 million in committed revenue from just the last quarter. And they're not stopping at chatbots. Anthropic has 3 additional revenue streams that haven't even fully launched yet. 1. Claude Code, their GitHub Copilot killer that's already in private beta with 40,000 developers. Early data shows 68% higher acceptance rates than Copilot and 40% faster PR merge times. Pricing starts at $99 dev month, but the enterprise tier is $20,000 per 100 seats. They expect 2 million paid developers by end of 2026.br. 2. Claude Search, a perplexity on steroids that's about to replace Google Workspace search for entire corporations. One pilot, with a Big 4 accounting firm, showed 2.3 hours saved per employee per week, at $45 per user per month. A 50,000 employee company is a $27 million annual contract. They already have 180 companies in paid pilots, Bob Barr. 3. Claude Custom, the dark horse. This is where companies pay Anthropic to train custom frontier models on their proprietary data with full alignment guarantees. The minimum check? $50 million up front, plus $100 million plus over 3 years. 4 deals are already signed. Names are under NDA, but think major defense contractors and the largest banks on earth. Add it all up, and you start to see how they get to $11 billion in 2026 without breaking a sweat. Now let's talk costs, because this is where most people think the dream dies. Training Claude 4, expected 4th quarter 2026, will cost an estimated $4 to $6 billion. Inference at scale is brutal. The current Claude 3.5 Sonnet cluster already costs them $180 million a month to run at current volume. By 2027, at 20 times the usage, Inference alone could be $3 to $4 billion a month if they don't optimize. But here's what the bears are missing. Anthropic has already locked in $18 billion of committed GPU capacity from Amazon and Google at prices 40–60% below what OpenAI is paying today, because they signed the deals 18 months ago when the chip shortage panic was at its peak. Their effective cost per million tokens is projected to drop from $1.80 today to under 20 cents by 2027 through mixture of experts' architectures and custom silicon they're co-designing with Broadcom. More importantly, gross margins on enterprise deals are absurd. Claude for Work seats have 94% gross margins. Custom model training deals, 97%. Even API revenue is crossing 80% margins as utilization climbs. Compare that to OpenAI, still bleeding on ChatGPT plus subsidies. Math works. Barely, but it works. The part nobody wants to say out loud, the safety tax is dead. For years, Anthropic branded itself as the safe AI company. Constitutional AI, scalable oversight, harmlessness training. They were going to move slower to move safer. That story raised $8 billion at a $40 billion valuation. But the new deck has exactly one slide on safety. One. And it's titled Safety as Competitive Advantage, meaning safety is now a selling point to close regulated industries, not a brake pedal. They've quietly abandoned the "we'll never build AGI if it's too dangerous" rhetoric. The new party line, we're building frontier models as fast as physically possible while maintaining industry-leading alignment. Translation: full speed ahead, and investors are eating it up. The current round is being led by a mystery buyer. Rumors say Saudi PIF or SoftBank Vision Fund 3 at a $120 to $150 billion pre-money valuation. That's a 3 times jump in 18 months. For context, that would make Anthropic worth more than Boeing, Airbus, and Uber combined (BR). Is it sustainable? Here's the bear case. In one sentence, if inference costs don't drop 90% and revenue growth slows to even 15% month over month instead of 25%, they burn $40 billion before profitability and die a spectacular death. Here's the bull case in one sentence. If Claude 4 ships on time, enterprise adoption follows the Slack Zoom Notion curve, and they capture just 15% of the $400 billion cloud spend up for grabs. $62 billion in 2028 is actually conservative. The truth, as always, is somewhere in the middle. But one thing is undeniable: Anthropic is no longer the cautious little brother. They've looked at the chessboard, seen OpenAI distracted by consumer apps and Microsoft drama, seen XAI still in the garage, seen Google asleep at the wheel, and they've decided to sprint. Profitable by 2028? Maybe not. But $30 to $40 billion in revenue by 2028, with a clear path to hundreds of billions in profit in the 2030s. The monster projections don't look so monstrous anymore. Dubber. They look like the new baseline. And if even half of this hits, we're not just watching the fastest company to ever reach a $100 billion valuation. We're watching the birth of the first trillion-dollar AI native company, built not on search, not on social, not on cloud, but on pure reasoning engines that enterprises will pay anything to own. Buckle up. The Claude era isn't coming. It's already here.